Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking General Mills. We don't hit this one much with you, but I thought it was pretty interesting. I've seen Kellogg's, that stock get a couple upgrades over the last week, but it seems like General Mills has pulled back pretty significantly over the last month. What's your take here, and what kind of data do you have out of LikeFolio?
Yeah, General Mills is up 18% or so over the last 12 months, despite that pullback that you talk about, which is really outperforming the consumer staples sector as a whole, which I think is up about 8%. So nice outperformance over the past year. I think the pullback was probably, overdue a little bit, I would say. As far as LikeFolio data on General Mills, this company owns so many brands. They've got, an absolute portfolio. I will say, I think that General Mills shareholders should be very grateful that they have a pet food business. I think that's where the growth is, because humans, it looks like, are growing a little bit tired of the food and the brands that they have. We looked at, two of their biggest brands on the human side, that is Cheerios, which, just kind of this stagnant staple that I guess, the people that buy Cheerios, they buy it really loyally. I don't think many others are jumping on the bandwagon. Then the other that we looked at was Annie's mac and cheese. And if you don't know the story about this brand, I strongly suggest that people look it up. Annie Withy, the founder of this company, had previously founded Smart Food Popcorn, which is one of my favorites. Every time I stop by a convenience store or gas station, I have to grab a bag of that. But she sold that in, I think, 1987, and turned right around and used the same powder to start creating mac and cheese, and that became Annie's mac and cheese. She put her real phone number on the label, and that boomed, and she sold it to General Mills for $840 million. So just a really phenomenal entrepreneurial success story that's not in tech and not in that sort of lane that we normally see. But that brand we're seeing down. It had its peak a couple of years ago, it looks like. So overall for General Mills, they own a lot. They have tons of brands. I'm really glad they're in the pet food business, because that's booming. Otherwise, this is a company that's honestly pretty boring, and I think its investors might like it that way.
I don't know why they call it Hamburger Helper, Andy, because it tastes good just the way it is. This is the company that makes Hamburger Helper. They make Cheerios. They make Nature Valley granola bars. They make a lot of interesting, more than 100 brands this company has. And really, now that we get over the funny part of the segment, this is really a story, Andy, isn't it, when you look at the stock, about inelasticity in pricing? Because if you look at their volumes are actually slightly lower, but they raised prices 14%. Which gave them a 13% net sales increase. So their ability to raise prices without hurting sales is really what helps companies like this that have, consumer staples have inelasticity. You're going to buy your granola bars and you're going to buy your Cheerios and their different cereal products no matter what the price is, Andy.
Yeah, no, I think you're absolutely right. I think, for a company like this, they call them recession-proof for pretty good reason. It's not like they have to introduce some brand new product or some brand new feature in order to keep up with the Joneses, like a lot of other companies and a lot of other industries do. This is a company that pays a little bit of a dividend. They have a very robust portfolio of brands. And, just because at LikeFolio we're seeing consumer enthusiasm around those brands down, doesn't mean necessarily that they aren't making more money, because, like you said, they can raise prices right alongside of everything else, and sometimes that can expand margins. And I really think that's going to be the story of this earnings call: is, are they able to continue raising prices beyond or at pace with their input costs?
Yeah, as their input costs are going down, it's going to, as you mentioned, widen out those margins. And this is one of those sticky parts of inflation. They're not going to pull prices down exponentially at any point. But when you look at happiness levels, maybe versus some of their competitors, Andy, I know they've got a wide array here, but what kind of happiness numbers do you see out of their brands? And then do you have an earnings score?
Yeah, pretty high. You know, General Mills makes products that people like, and they invest in those. That wide portfolio becomes pretty narrow when it comes to what the company really puts its resources and ad dollars behind. So I think they have a really good, effective management team at finding out what's working and doubling down on that. So really well-run company. In terms of an earnings score, the recent pullback makes us just a little bit bullish. But I don't think we're in for any huge surprise. I think it's going to come down to that outlook, especially on the inflation and input cost side.
All right, great data as always. And Andy, you mentioned Smart Food. You picked some of that stuff up. They got that new flavor, Cool Ranch Dorito, which we had it in the office. It is amazing.
Oh, okay. I'll have to try that. I always go with the standard every time, but with a Tom White recommendation, I'm all in.
All right, sounds good. Thanks, Andy. Appreciate it.
Thank you.
Yep, that's Andy Swan, co-founder at LikeFolio, breaking down the data for us. Now,